concerning the impact of COVID-19, we see three different stages. Up to early May, markets were virtually on ice, and companies were focusing on operational issues rather than on strategy or M&A. In the short term, this May, new projects started and talks and negotiations on existing projects have been going on.
So what we saw initially was panic in the market, complete reduction of everything. Like from people visiting our website, inquiries made on our website, we saw over 50% reduction in everything just across the board, just all of a sudden just wiped out, and that literally happened overnight. So we were talking a relatively normal day in the UK on the 15th of March, and then which was a Sunday, and then on Monday the 16th of March 50% of everything was just gone overnight. Now there was an initial kind of panic period of about 2 weeks, and then we started to see it starting to crawl back. So initially, and it's all happened quite quickly. So initially on the 29th of March, we saw an increase and we gained back about 25% of that 50% that we lost. So we saw that come back. And actually now, if we look at Saturday, the 16th of May, or Sunday, the 17th of May, that was our highest traffic day this year. So we saw initial shock impact and everyone just stopped. And then as things have gone on, it's kind of released off a little bit. Now the overall effect on this has been is very sector specific.
So you believe that the level of M&A opportunities will depend both on the way in which the company, its sector and economic system are more or less seriously affected by the crisis, but also on the level of agility, including financial, in launching stopped activity.
In general, the economy in Spain and Europe will slow down, especially in the most vulnerable sectors like tourism, which is in one of the main sectors in Spain, as you know.
We observe an increasing gaps and variations between industries. For example, the retail and tourism industries have been hit particularly hard with the sudden disappearance of their clients. And the agricultural sector, for example, which largely relies on foreign seasonal workers for their harvest, can no longer find the help they need. Meanwhile, other companies have reinvented themselves to build, create, and deliver essential goods, or simply found new ways to survive by offering their products and services online.
Unfortunately, there will be too many distressed businesses and hence distressed transactions, no doubt. I believe that some businesses that have shut down but are able to restart, so long as the restart is accelerated, the impact on these businesses will be minimal, if any. I do believe that these resilient and quick to adapt or reinvent themselves businesses will really help us avoid a long recession. Those businesses that are doing well right now may be seen as recession-proof and virus calamity-proof, and may be in the best position for competitive buys, possibly even driving up multiples in those specific sectors.
On the buyer's part, it seems to be more activity, so that's a good sign that they are looking already for opportunities, and probably you're going to have more transactions in the near future.
For those who have money to invest, the immediate futures can be a good time to buy. I think that in the coming years, the market will be for buyers.
On the buy side, we're really seeing a lot of companies looking to reevaluate the market. As far as we're looking at distressed assets, also companies looking to reevaluate previous deals that they may not have, or that they may have discarded, because now they feel that they can get better valuations on those deals.
The opportunities are obviously still out there, but lately it has become a little more difficult to transform intentions into transactions in these times.
On the seller's part, it's quiet, so probably they are waiting to see how this situation is going to affect their business.
But we also see that those who wanted to go to retirement before the crisis still follow the plan, even when they would lose some money. For the moment, it's still the case.
We will see also the advancement of the retirement or pre-retirement moment of business owners. They're not willing to pass another crisis.
The readiness to sell is given in case there is a strategic logic. For example, a need of consolidation. Some sellers need capital and expertise and want also to reduce the risk. On valuation, prices have been peaked in 2018, also already in 2017, and thus private companies have been partly overvalued. We see a strong adjustment of company values towards lower valuations, and we expect absolute prices to fall by 10 to 20% for less affected industries, but by about 50% for very affected industries. However, we expect major transactions only beginning with September 2020.
And during the last few years, we have seen that maybe the valuations have been a bit higher because of the economic boom. Our year 2019 was exceptional from our financing perspective because the amount we financed in euros was on its peak when we look back like 5 years time span. Also, the crisis will affect the key figures of the companies, and via those the valuation might have to be corrected, especially if you have started the business transfer process before the coronavirus. Also, because of the uncertainty of the future cash flow, it's very difficult to predict the loan servicing ability, so it might be difficult to even think about getting a loan for the business.
We see deal terms and especially valuations having to be revised in light of the current conditions. Also, a lot of diligence work that was previously done needs to be revised given the changes in companies, their financials, or if they've had to downsize, we need to factor that as a consideration as well.
We were convinced that the value of businesses were going to drop. And actually what we've seen is a business that is a good business that was going to sell before the crisis, before the COVID kind of lockdown, is still a good business that is going to maintain its value.
In the medium term, so beginning with the fourth quarter of 2020, the M&A window will open up, especially for many distressed situations. In between, we really recommend to use the time to screen targets and to have first talks and negotiations. To have a close look at the business model of the target after a crisis, so this means in new normal. And to prove this, a thorough SWOT analysis as well as a corporate planning is needed.
Having said that, opportunities are out there and we will see a new wave of transactions resurfacing as soon as the deconfinement is in progress and the confidence rebuilds itself within the business community.
If there is not a strong business transfer ecosystem, and some trends will change both parts of the business transfer market, the supply and the demand.
As far as the impact of COVID-19, obviously China experienced COVID-19 a little bit before other countries, and so we're starting to see a rebound and a recovery in China before other countries are as well, and I think that presents some opportunities for M&A. One of the opportunities being that China is probably one of the only large economies that is expected to see some positive growth in 2020. We're expecting to see M&A pick up towards the end of the year and in the last 2 quarters of the year.